Donald Trump again roiled financial markets. The US dollar slipped across the board following a series of his tweets and a surprise announcement on the trade deal. At present, traders are keeping close tabs on developments of the trade conflict. No wonder the announcement that the trade deal could be signed with a delay instantly ruined investors' confidence. Washington is ready to impose new sanctions on France. The US leader threatened to slap 100% tariffs on French imports worth $2.4 billion. Other countries to be targeted with sanctions are Italy, Turkey and Austria. The US president said that a trade deal with China might have to wait until after the presidential election of 2020. Such an announcement boosted demand for safe haven assets. The next round of tariffs on China's imports is scheduled to come into force on December 15. Today, China's offshore yuan fell to its weakest mark since October. The dollar-yen pair dipped to 108.83, away from a 6-month high of 109.73 hit on Monday. Meanwhile, US Treasuries are regaining losses, but the stocks have taken a nosedive. Despite an uptick against the euro and the sterling, the US dollar is extending the overall downtrend. The greenback has been weighed down by a worse-than-expected manufacturing PMI from the Institute for Supply Management. The US dollar index is trading at near 97.79 in the New York trade. The US dollar versus the Canadian dollar pair has come under strong selling pressure today. The loonie has not been able to gain ground amid the US dollar's weakness yet. The currency pair is still trading higher at about 1.3309. Analysts expect the loonie to win back losses in the short term. Crude oil finds support from growing expectations of deeper oil output cuts when OPEC and its allies meet this week. The US dollar versus the Canadian dollar pair aims to climb to 1.3330 and higher to 1.3350 and 1.3385. The currency pair is likely to trade sideways until the Bank of Canada unveils its policy decision on Wednesday. Remarkably, manufacturing PMIs of the US trade rivals improved in November for the first time in a few months. At the same time, the US manufacturing sector contracted worse than expected for the fourth straight month, despite a series of rate cuts by the Fed. So the US dollar is expected to weaken versus its major rival currencies. That's all for today. Thank you for watching and stay tuned.